Right, well, moving on in our special offering Value Add. Today we're focusing on the defense sector in India. So there's been so much talk. Of course, the government has been giving out orders or has big plans for the defense sector. Mangalam, tell us more.
Well, there is an interesting note which has come in from Phillip Cap, and they've initiated coverage on the defense sector. And I call it interesting largely because it's not an undiscovered sector. After a big rally that we've seen in the defense stocks already over the last 1 year or so, they believe that there is a lot more to go. Why is that? Because the opportunity pipeline for India's defense business over the next 6 to 8 years is almost $110 billion. And just for perspective, their stocks under coverage had a cumulative revenue of just under $8 billion last year. So, of course, the revenues can, move manifold from here itself. What exactly does this $110 billion opportunity entail? Aerospace would be close to around $44 billion. Shipbuilding would be about $40 billion. And artillery and guns would be around $26 billion. Why are these stocks placed favorably? One, because there is long-term growth execution visibility backed by robust order book and a healthy pipeline itself. Secondly, the government's focusing on localization, so timely execution due to that. Integrated construction and subcontracting would provide fillip to all the other players in this space as well. Secondly, there would be high barriers to entry because government's preference is a moat, domain expertise is a moat, so that would keep the companies which are in it fairly protected. Then there are companies which have cash-rich balance sheets, so that will avoid major working capital issues as well. And in-house R&D investments, appropriate tech support coming in from the DRDO and all the authorities would work well for them as well. And remember, domestic procurement or domestic capex has increased from 38% 10 years ago to 68%. And above all these things, for companies, they have dividend payouts of anywhere between 30 to 60%. So all of this makes it pretty favorable for investors to enter this space. In fact, they believe that going forward, margins for these companies could also increase due to efficiencies developed over the years and the indigenization mandate. So for the parts that you were importing, if you're using local producers now or local products, then your margins will improve. Let's drill it down to the stocks. What are the stocks that they like? They like Bharat Electronics. They have a buy rating on that, target price of 159. Bharat Dynamics is the other one. Buy rating with a target price upwards of 1400 rupees. 1428 is what they suggest here. Solar Industries, the large dynamite player too, they have a target price of 4318 on that counter. And MTAR Tech is the other one which they suggest to buy with a target price upwards of 2630.
All right, that's on the defense sector. Well, PCBL is surging in trade after the company commissions its specialty chemical capacity expansion plan. Sonal joins in to tell us more on that. Sonal, over to you.
Thank you so much for